Gold prices rallied after posting new year-to-date lows yesterday. Not really finding themselves in a bull channel yet, still remain below 1280, which I think is going to be a significant line. North of 1280 doesn't necessarily make them bullish either, but I think it takes some of the bearish stigma off. Gold right now going back to the end of March and really just after March FOMC, it's been a steady decline from those highs down to where we are, down to the mid 1270s. And I think right now, getting back above 1280, maybe nearing 1290, will get us back to more of a neutral gold pricing. Right now it still remains in a sort of a bearish tone, bearish mode, bearish technicals, and I think ultimately until we see a reversal, whether it be coming from some event that happens, demand, or maybe just some kind of risk, risk off trade, that we need to get back into more of a neutral mode. Right now we're not there. We're still, I think, tending towards bearishness in gold prices right now where they are. If you look at the dollar very, very strong today, so certainly not affecting the rise and rally in gold prices that we saw. Dollar index posting new year-to-date highs. So dollar very strong. Some of it is attributed to the strength of the U.S. economy, what's happening. Obviously, the Fed not tightening doesn't help, but the Fed not easing, I think, is a strong point. It's more of a how is it compared to, look at what's going on in the euro, look at what's going on in Canada and in Australia, the UK. Those are all looking much weaker as opposed to the dollar just benefiting from that. So I think ultimately the dollar strength may be coming on others' weakness or perceived weakness, because certainly the Fed isn't going to be raising rates. Yields in the U.S., while they are higher than their counterparts overseas, are nearing their lows. So right now it just seems to me that the dollar remains the strongest of the bunch, but strength is not really how I'd lead with the dollar right now. And if you look at positioning, what will speculators be doing here after being marked at their least long of the year last week? Well, I think they're probably going to remain at their least long. I don't see them making any sort of long decisions here to jump back in with both feet, especially given the fact that the market, while it did rally today, hasn't really found its footing, and that bear tone still remains. So I think if we get a trade down to that target level of 1255, then I think you would see some longs jump in or maybe scale in on the way down. But we really haven't seen that yet, and I think they're waiting for a confirmation. We're going back towards 1300 or we're going back towards 1255, and until we do that, we're kind of spinning our tires here in no man's land, and I think that speculators will continue to watch. I don't see them adding, maybe even I see them exiting more, becoming even less long than they were last week. So right now, gold prices, while they did have a bit of a relief rally today, not seeing a bullish tone yet. Dollar strength might come back to haunt this gold rally we saw today, but currently still in a bear mode is gold prices.